In exercise 3-4, we're given a trial balance for the Watto company that's out of balance. And we're told there's been some errors made, and we're given those mistakes down below. And we're also told that the trial balance everything has its natural balance. So cash shouldn't be a $2,870 credit balance, but instead we should record it as a debit. The AR is fine, supplies are fine, equipment's fine. Accounts payable is fine. Unearned revenue, though, typically doesn't have a debit balance, but unearned revenue is a liability, so it should have a credit balance of $1,200. Then we've got $6,000, $3,000, everything else looks fine, and I've added dividends because we're going to need that account later on. Typically, the best way to handle errors is to do an entry first to reverse the error, and then second, an entry to correct the error. So that's the process we'll go through on all 8 of these journal entries. All right, let's go ahead and consider our entries. We're told that we received cash from a customer on account, and we had debited 570 cash, and accounts receivable was credited for the same amount. But the actual correction was for 570. So this first entry we made was in error. So let's just reverse that entry. Let's take the money out of cash and put it back into accounts receivable. Now let's go ahead and record the correct entry, which would be to increase cash and decrease accounts receivable. Moving on to 2, we purchased a computer printer on account for $500, and it was recorded as a debit to supplies and a $500 credit to accounts payable. Now that's the incorrect entry, so let's go ahead and reverse that. Let's take it out of supplies and put it back into accounts payable, or rather reduce accounts payable. So we're reducing supplies by 500, and we're reducing our accounts payable for 500. The proper entry would have been a $500 credit to accounts payable and a $500 credit to equipment. So we should have seen both accounts payable increase by 500 and equipment increase by 500. So notice we really didn't need to do anything with accounts payable, but generally what I find easiest is when we make an error, just completely reverse the entry that was wrong and then record the entry as if we had done it correct from the very start. Let's go ahead and take a look at 3. Service revenues were performed on account for a client for $890. We had debited accounts receivable for $890, and we credited service revenue for $89. So let's do the exact opposite for this. Debit to AR would have increased it, so let's decrease accounts receivable by $890, and let's decrease our service revenue for $89. The correct entry would have been to increase accounts receivable by $890 and increase our service revenue by $890. 4. A payment of $65 for telephone charges was recorded as a debit to office expense and a debit to cash for $65. So we need to reduce office expense, and we also need to reduce cash. So here's our $65 reduction in cash. Here's our $65 reduction to office expense. The correct entry would have been a reduction in cash of $65 and an increase to expense of $65. Going on to item 5, unearned service revenue account was reviewed. It was found that service revenue amounting to $325 was performed prior to June 30th, which is our financial statement date. So we don't have an error, we just have unrecorded service revenue. So we need to increase service revenue by $325 and decrease our unearned service revenue by $325. There was no entry to correct. Moving on to 6. A debit posting of salaries and wage expense of $670 was omitted, so we just failed to record an entry. We don't have any correction, we just need to record that entry. And that entry will be a debit to salaries expense, and that's it, because we had just left out that part of the entry. Item number 7, a payment on account for $206 was credited to cash for $206. That's fine. Now, if we make a payment on account for $206, cash goes down by $206. But we, instead of decreasing accounts payable, we increased it, and we increased it by the wrong amount. So let's just completely reverse that entry. Let's put 206 back into cash, and let's go ahead and reduce our accounts payable by 260, because recall we had credited it, which increased accounts payable by 260. So to reverse that, we want to decrease accounts payable by 260. Now we'll record the correct entry, which was a $206 decrease to cash and a $206 decrease to accounts payable. So again, the original entry was to reduce cash and increase accounts payable. So we want to reverse that, and that was to increase accounts payable. So we need to decrease it, and we need to put the money back into cash. So there was our reversing entry, and then of course the correct entry. Finally, we had a dividend of $575 was debited to salary expense and credited to cash. Now the cash part is correct, but the salaries expense is wrong. But again, the way I think is best to approach this is just reverse the entire entry. So when we reverse that entry, we would put the money back into cash and take it out of salaries expense. And then when we record the correct entry, we will take it out of cash and we will record dividends. The last step then is to calculate our adjusted balances. We need to take the original balance and add all of our adjustments to get an adjusted balance. So when we sum up the row for cash, we get 29,220. And again, that's simply the sum of those accounts. Accounts receivable, we sum up those numbers and we get the 30,051. So we have a total adjusted balance for the debit side of 15,000. And then of course we'll do the same things for our credit balances. And when we add up our credit balances, we find our total debits equal our total credits, and we have a corrected, adjusted trial balance.